What's up, everyone? It's Kadi with MoneyVest. So we're here to talk about Meta earnings because it dropped right after I got done with the market update video. It was already kind of teetering a little bit. It was certainly showing signs of weakness because my alerts went off at under $300 per share. It got up to as much as $315, I think, and $316 after hours, and then selling right back down. This market is brutal. Make it make sense, right? Because they reported fantastic numbers. I mean, they increased revenues, earnings, they cut their expense guidance. Everything was phenomenal. And yet the stock is down. What the heck is going on? I think interest rates may have something to do with it. So anyway, we're going to break all of that down in this video. I'm going to also calculate my updated intrinsic value on Meta. So towards the end of this video, I'll go over the intrinsic value for the company. As always, if you enjoyed, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. And link to our Discord and Patreon is going to be down below. There is a 16% annual discount available for one more week with the link down below. And again, you'll get access to all the TradingView charts, members only private videos, of course, access to our MoneyVest Pro platform, which we are launching in 2024. You can also go to moneyvest.com and sign up over there as well. So happy to have you on board, and let's get started. So these right here are the segment results. We're going to come back to these, but I want to start as expenses, right? Because Mark Zuckerberg really turned the company around in October of 2022. So almost exactly 1 year ago, Meta Platform was obviously going through significant amount of pain. I remember same time last year, you go back, Meta was trading at roughly under $80, right? $90, and it was trading at extremely cheap valuations because they were pouring money into the metaverse and the augmented reality vision. And it's kind of funny that as soon as Apple entered this market, all of a sudden this entire market got validated in a sense that, oh, Meta was ahead of its game and they were doing the right thing. But that's neither here nor there. The bottom line is Mark Zuckerberg obviously taking leadership and cutting expenses for the company and basically putting 2023 as the year for lean efficiency. And as a result, the stock has performed really well. It's actually one of the best performing big tech companies in 2023 next to NVIDIA. And I think Tesla might be up there as well. But the bottom line is they have been cutting expenses as a percentage of revenue. And that's been one of the biggest things that Wall Street likes to see is keep up with your efficiency, keep up with your actual revenue and profitability growth while also lowering expenses. Because what does that do? That expands margins and that also increases the earnings per share. And that's what Wall Street cares about. At the end of the day, that's all they care about is the bottom line and the profitability. As unfortunate as it is, that's the reality. Now, that has obviously played a significant role. So if you come over to where Q4 and Q3 earnings pretty much bottomed, so you can see that this right here, we pretty much bottomed. So we basically came back down and went right back up, similar to what we experienced with expenses, right? We went back up and then we came right back down. And as expenses were cut, this is the net income, $11.5 billion for the company, right? And again, you can kind of see that in the diluted earnings per share came down, bottomed at around, third and fourth quarter of 2022, and then had a very nice spike to $4.39. And that's over 100% increase on a year-over-year basis. CapEx for this year is lower year to date compared to same time last year, $2 billion lower, and substantially lower for the third quarter 2023 from $9.5 billion down to $6.7 billion. So family of daily active people, just a little bit over 3.1 billion. That's again incredible. 3.96, almost 4 billion monthly active people, family monthly active people on Facebook, which includes, of course, all their services. And this is daily active users, a little bit over 2.08 billion as of the third quarter. MAU is also increasing to 3.05 billion and increasing on a year-over-year basis. Majority of that gains coming from a little bit from US and Canada, so 1 million from US and Canada. Then we had a little bit over about 9 million from the rest of the world, and Asia Pacific also increasing by about 8 million. So across the board increases. The only small section which dropped was Europe by about 1 million. This right here is going to be the average revenue per user, right? So ARPUs. And what you'll notice is worldwide, obviously increasing to over $11.23, right? So very, very nice growth there for the company. And this is usually the best time, like third quarter, fourth quarter is the time. And there's a lot of advertising spend. And it makes sense why ARPU would be on the rise at the moment. So these right here are the results. Of course, revenue coming in at just over $27.7 billion. You got an increase in revenue, 23%. and a decline in cost, right? Cost and expenses are down 7% from a year ago. Income from operations up 143%, and net income up 164% to just under $4.4 billion. Actually, I'm going over the wrong numbers here. Still sleepy. This right here is the revenues, 34.1 billion, up 23%. Costs are down. Income from operations to $13.7 billion. And look at that operating margin, right? Expanded from 20 to 40%, right? Very, very strong growth. And net income coming in at just over 11.5 or $4.39. Massive triple-digit growth for the company. So what Meta really showed us in this earnings is the fact that their core business remains strong, right? 1 year ago, there was a lot of concerns that their core business is dying and Meta is no longer the advertising king and they're spending too much money on a sort of like a lost cause, which was the metaverse. But this earnings pretty much solidifies the fact that their core business remains strong and it's up to Meta, right? They can literally just turn the dial and how aggressive they want to be with pursuing other projects and other ideas, right? It's completely up to them. If they want, they can just focus on their core business and the business will perform well, with expanding margins, expanding growth, revenues, earnings. It will do well if they simply focus on their core business. But they don't want to, right? They don't want to adapt to the changing technological environment. They want to spend a lot of money in other projects so that they can be, again, the company for the long term. They can be there for the long term and provide users, with the new technology. And of course, we've learned from the Meta Quest 3, we got, Ray-Ban Meta Smart Glasses and our AI studios. There's a lot of projects that they are investing in, but they're only doing that in a more efficient and more lean manner now than they were like 12 months ago, for example. So when it comes to the outlook commentary, expect fourth quarter 2023 revenues to be in the range of $36.5 to $40 billion. And their guidance assume a foreign currency tailwind approximately 2%, give or take. And their full 2023 expenses will be in the range of $87 to $89 billion, which is lower than the prior range of $88 to $91 billion. So they're spending less and they're making more, and the stock's down 4 to 5%. That makes complete sense, doesn't it? Balance sheet's fantastic. So they're sitting on about $60 billion worth of cash and marketable securities and $73 billion in total liabilities, with long-term debt of $18.3 billion. So without a doubt, this is one of the best balance sheets out there. And again, beat on EPS, beat on revenue, beat on DAUs, beat on MAUs, pretty much matching MAUs, average revenue per user, beat on ARPUs. It's absolutely incredible how Wall Street can just be so ruthless when it comes to certain stocks. Down over 3.3% after hours, of course. And the futures are open. And NASDAQ is down another 1%. For futures right now. It's brutal. I think this sell-off is going to be there for a while until yields start to roll over, because yields are basically the driving factor behind the entire market right now. At least in my opinion, I think this is really why technology is coming under a lot of pressure, is because of the 10-year yields that are pushing up to almost 5%, right? So I think it's really prudent to be a little bit more defensive right now and, be more risk averse, considering that we're closing out the year. And it's possible that next couple of months continue to be a little bit more volatile if yields continue to move higher, and of course if there's more momentum in the dollar index and the crude oil prices don't come down and they stay elevated. But going over to Meta again, this right here obviously is a sell-off, and we're starting to break down below the 100 simple moving average. As unfortunate as it is, this is the 100 SMA that it's been trading above since the beginning of this year. It's validated this level a couple times, got rejected at a horizontal resistance. So we had a very, very strong resistance for Meta at around $325, $326. So this right here is a resistance, and we're now starting to break down after hours. We've already broken down below 299, so we're basically trading as low as 289. So we're seeing a $10 drop in a Meta, and next support is going to be sitting roughly at around here at 275 for Meta platforms. So that's going to be that next level to watch. Now, if you look at the earnings expectations, they are expected to grow earnings from $13 to over $32. That's a 15% CAGR over the next 5 years. And if I plug in, a conservative estimate of 14%, give them a 20 times P multiple, which, by the way, Meta right now is trading at a slightly higher P multiple, now back over 36 right now, but this may not be super accurate. So if you go over to Seeking Alpha, just for a quick analysis on Meta to see where the valuation is, let's just go to valuation, and it does say that we are on a non-GAAP forward basis of 23, right? So 23 again on a forward basis, on a GAAP basis as well. So 23 is where we're at. Price to cash flow, we're a little bit over 14. So If I go with 20 times earnings multiple, which again is going to be a little bit lower than where we're trading currently, free cash flow growth rate of about, let's say, 18%, considering that they have grown free cash flows by over 22%, and I go with a free cash flow multiple of, let's say, 16, then a 12% discount rate, 10% margin of safety. We do a 75% weighting over to the EPS, and then we do about 0.5% in share dilution. We come to a fair value of closer to $192. If I do a free cash flow multiple over 16, closer, let's say 18, right now it's trading at 14, so maybe there's a little bit of expansion there when it comes to free cash flow, so let's do 18. Then the fair value still sits at just under 198, a little bit over 198, so we're looking at just under $200. And of course, the market price right now is $289 per share. That means just another 30% potential downside needed in order for Meta to be trading at its intrinsic value based on today's numbers that we know of. So I think that's a little bit unchanged from what I have on my intrinsic value spreadsheet, but that's really where we are with Meta. Let me know your thoughts down in the comment section below. Technically speaking, I think there's a possibility that it does break down sub 280 as well, and then potentially 274, 275 is going to be that next level to watch as a support for Meta platforms. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. Again, there is a 16% annual discount available till the end of this month. We'll love to have you on board with the link down below. As always, happy investing. I'll see you all in the next video.